Parimal, thanks very much for taking out the time. Profits have fallen 66% for the quarter, and the top line has also grown just about 11%. Do you see the scenario changing in the coming few quarters? What impacted profitability, and how will that pan out over the next few months?
Well, this last quarter was one of the most difficult quarters we've had in the last 3 years. And the main reason has been that the rupee depreciated very sharply in that quarter, and we got the full impact of this rupee depreciation. All our soft luggage is imported, and so the cost of acquiring the goods went up substantially. The rupee depreciated by about 25%, and that straight went to our bottom line, against our bottom line. And that was the main impact, and also the market was not so buoyant in the last quarter. Fortunately, January has seen a good turnaround. Firstly, on the exchange front, the rupee, which had gone down to as low as about 54 rupees to a dollar, is now hovering around 49. It used to be around 46. So that is more than a 50% improvement. And also the January month was pretty good sales-wise. Where we are also losing sales is on the international front, because in the 9 months, I think we are down by about 15% as against growth which we had anticipated. And while our domestic business has grown by about 17%, our average growth has been 15%, which has been slowed down by the international markets. So I think the outlook is much better than the last quarter. And of course, we've had 9 very good quarters up to June 11, where everything went our way. And now there are a few breaks or a few impediments, but on the whole, the outlook is good. Our market position is quite strong. Our brands are doing well, and all our 4 major brands, that is Carlton, VIP, Skybags, and Alpha, are progressing quite well.
Parimal, morning, Neeraj here. Probably no question marks on the sales, because despite a difficult quarter, you had an 11% growth on the top line. There are a few question marks, however, at the operating level and below the operating level, and I just want to tackle them one by one. One is at the operating level. Sure enough, your import cost went up, and which is why the EBITDA margin shrank to around 10.5 versus 16%. The question mark really is, with the rupee what it is doing in the current quarter, can your EBITDA margins go up from these 10.5 to maybe 12, 13, or possibly even closer to that 16% mark in the Jan-Feb March quarter itself?
I think so. It will be somewhere around 14%.
Okay. So there is...
For example, we had a 4 crore exchange loss in the last quarter. And now, already out of that 4 crores, 3 crores has been wiped off at the current rates. So this exchange is playing the major role in our profitability at the moment.
Yeah, I mean, even stripped for the foreign exchange loss, Mr. Parimal, the profits have gone down quite a bit, and probably a lot of it had also to do with how the operational picture was.
Yes, of course.
But the other bit, Mr. Parimal, is also the tax picture, which at 30% has probably been higher than what a few people were working with. So the question is, over the next few quarters, is 30% the normalized tax rate that you would have to pay? Or was this 30% only for the October to December quarter?
No, it will be 30% is the normal rate. Now we are virtually at the full tax rate. We do have a little bit of tax rebate at our Haridwar plant, but that is a very small portion of our overall profits. So we are virtually at the full tax rate, and that is something which I had announced right at the beginning.
Right. Mr. Parimal, other expenses have also gone up by 25%. While you spoke a bit about that, what was your ad expenditure as a percentage of sales? How much has that gone up by? And also would want your perspective on the discounts, rebates and commission in Q3, which also rose by about 17%.
Well, quarter three, as I said, was a difficult quarter because one is that the sales didn't grow as expected. They were slightly lower than our expectation, and in the overall picture, the export sales are also taken, so you get all the percentages as a net of the overall sales. So advertising is, we are advertising about 6% of our sales, of our domestic sales. And our other expenses also have gone up because in this current year we have invested in our manpower, in our design, and in all areas of operation. So expenses have been a bit higher.
Would you be looking at price revisions then in the coming quarter?
Yes, we usually take a price revision in the month of May. We have some price increase in the month of October, not necessarily in all the items. And we did that this year in November after the currency rise. And you usually have a price increase in the month of May.
Okay, Mr. Piramal, just as we wind down then, you had 11%.
We have to also see take care of the competitive situation.
Okay. Okay, what I was actually getting to in terms of numbers was that you did 11% top line growth in Q3. What's the estimate for Q4? One, in terms of how the top line growth would be. And two, you think you'll be able to reach the estimated 6.5 to 7 rupees of an earnings per share for the full year at the end of Q4?
Actually, with our share price going at rupees 2, I'm not absolutely on date with the earning figures in the new numbers, but I think there will be a slight, I think that might be a bit difficult to earn that amount.
Okay, but on the bottom line,
fingers crossed.
But on the bottom line, Mr. Piramal, you think Q4, instead of a degrowth that you've shown in the current quarter, or the lower growth that you've shown in the current quarter, would there be a growth figure? Because I'm guessing from your answers that your top line will definitely grow in Jan, Feb, March.
Yes, but I think bottom line should be the same. For the overall, I think last year we did a PBT of 103 crores. And right now, if we achieve that, I would be quite happy. Of course, our PAT will be less than last year's because last year we had a tax break.